So, do people that are approaching retirement really want the stock market to crash? Because it is crashing. It happens all the time. Stock markets crash, they correct, they have bear markets. And believe it or not, there are people who love to see it happen. They want the market to crash. And is that going to be someone that's retiring? If you're close to retirement or in retirement, should you be wanting this market to crash? Well, that's what we're going to talk about today. Let me bring in my co-host, Tony Shore. Welcome to the show, Tony. So, stock market corrections and bear markets, part of life. We did a show recently on what to do if you're retiring in a bear market. Uh, are you one of these people that hope the stock market crashes?
If you're asking me, no, at this point, not really, although I do know the wisdom behind it. I mentioned this when we've talked about this in the past. I think it's been quite a few years, though, 5 years maybe.
Yeah.
It's been 5 years since we've done this because that's the last time it was COVID, right? 2020 maybe, when the market went down or had this kind of volatility. And I said, who's the number one investor, the most respected investor and successful investor of at least our lifetimes, it probably ever? And that's Warren Buffett with Berkshire Hathaway, the Oracle of Omaha. And he said he loves down markets. He loves market crashes because it's an opportunity.
Yeah.
And of course, he runs an investment firm and has a lot of money to invest. So not everybody loves to quote Warren Buffett, but I can't do what Warren Buffett does. So I say, hey, that sounds good. If Warren Buffett likes it, this is good for people, right? And then I'm thinking, wait, I'm not Warren Buffett.
So are you saying Warren Buffett wants the stock market to crash?
I'm saying he wants it to go down. I don't know what your definition of crash is. I do know that he loves down markets.
Does he like bear markets?
He likes
20% plus corrections.
Yes, he likes bear markets.
You think so?
I personally think he does, and because he's talked about the opportunities it provides.
Okay, so I'm going to go through 6 types of people that like to see the stock markets go down.
Okay.
I want to see if you can figure out which one Warren Buffett is, if he is.
Okay.
I am maybe multiple. I have multiple personalities on this. And I want to talk about whether or not retirees should be in any of these categories. And the answer is yes, they should. Spoiler alert. But let's go through them and see what you think. So there are 6 types of people that like to see the market go down. And I'm going to start with an easy one. Doomsday champions, I call them. Fearmongers. I'll give you an example. What's his name? Robert Kiyosaki?
Yep.
Is that his name? Rich Dad, Poor Dad?
Yep.
I see him all over the internet, maybe even TV commercials, touting that the world is going to collapse. The stock market's going to collapse. Retirees should be not in the stock market. They should be in his choice of investments. And then you have to click through and listen to find out what they are. And you come full circle around to what he's touting, which is cryptocurrency and gold. So he loves it. You got fearmongers. So turn on the news.
News media. They love it.
Now, do we think that the head of like Jim Cramer or someone on CNBC or Fox Business or whatever, Bloomberg TV, do I think that they want the stock market to crash? Not really, because they probably have stocks. Like, Warren Buffett doesn't want the market to crash because he owns stocks, doesn't he? But they like it because they get sensational headlines and they can get on the TV and talk about, what to do and what not to do. So those people kind of want to see it.
Yeah.
But we ignore them, right?
They will be people love dirt. Some people love dirty laundry, right?
They love it, right? Anti-capitalists and geopolitical rivals. This is the easy one too. Other countries, they want the U.S. stock market to crash because, if a friend of the enemy is a friend of mine, you see probably people in political countries like Russia and China would like to see continued crashing of the U.S. stock market. Not the average citizen of China, but the leaders who don't like us right now. And And there's some people that don't like Trump, so they like to see the market crash because they see that as a direct reflection on Trump's policies, right? And I say to them, that's kind of silly. Think about that for a moment. Schadenfreude, I think, is the term, right?
Yep,
Like,
Schadenfreude.
I don't know if this is a good strategy, so I'm going to skip to the next one because I can go all day about how ridiculous these are. But going back to the Wall Street movement, anti-capitalists, Occupy Wall Street, they like to see the markets, the greedy corporations are hurting, as a validation of their anti-capitalist behavior. Well, we're not going to get into that, Tony, because I know you can talk from experience on that.
No, that's not true. Not true. No,
So,
I don't want to see it.
Short sellers and contrarians, number 3. So this is a little
big
different.
one.
Yeah.
People have been making money lately off the market. I just read a huge article about how many millions of dollars people have been making by short selling the market with the tariffs.
Right. And so most people understand, and most retirees have 401ks that they're investing long-term for growth. They're on the long side, not the short side. Not many people are on the short side. My clients are not on the short side. I'm not on the short side. Not saying it's bad. Some people call it anti-American, but you can bet against a stock by selling it short. What that means is you're selling it and you're going to buy it back later. So you hope it goes down, right? When you buy a stock, you buy Apple for $100 and it goes down to 80, you've lost 20%. You're like, oh, but if it goes up to 150, you're like, oh, I just made 50%. You're hoping it goes up. The short sellers sell it at 100 and hope it goes down to 80 because then they can buy it at that point. They've already sold it. So it's a reverse, right? It's allowed. It's part of life. And I look at it as there's two sides of a coin. You're not going to be able to buy a stock unless there's someone willing to sell it to you. So you need sellers, but short sellers, some people don't like it. Contrarian investors, they're betting against the markets. You hear about these people, and you just said you saw an article on it, Tony.
Yeah.
There was a movie, Big Short.
Yep.
People betting against, they see something and they can bet against it. And I say against it. They're betting for something to happen. They're betting for something to go down. Seems anti-American, right?
Well, yeah, and some people have combated that, like what they did with the GameStop stock, because all the those accounts on Wall Street, all the what do you call them that short sell so often? Some of the hedge fund managers,
hedge fund managers, they're short hedge funds. They're people that specialize in this,
and they were shorting stocks like that, and then they bought and made it go up,
right?
And they got stuck.
Right. So you're like, yeah, good for the little guy. They're combining together to fight. But in the end, who wins? No one.
Yeah.
The big Wall Street companies but it comes down to information and what they're doing. And it's just another way of trading. But those people particularly like to see market corrections. Those people and day traders, I used to be one. My friends still do it. They like volatility. They don't necessarily want to go up and down, go up or go down. They like to see movements because there's more activity and more ways to make money. Okay. Number 4, alternative investors. People that aren't investing in the stock market kind of want to see it go down. So we'll throw in here gold bugs, people that buy gold because they say the currency is going to go to crap and they want to own physical gold so they can buy seeds and ammo when the market crashes, or people that are buying real estate, or people that are buying cryptocurrency, people that are buying alternative things to the stock market generally don't want to see everyone suffer, but they like the market to go down because it validates their strategy, right? Someone that sells bonds for a living likes to see the stock market go down and bonds go up because they can say, I told you so, right? So the problem is that most alternative investments are bundled with traditional stocks. So you don't necessarily want to see the stock market go down. But those that are hyper focused, like a gold bug that only owns gold, or cryptocurrency specialist that only owns crypto, they want that market to crash so that more people flock to their alternative. And that's why you see gold up so much,
Sure.
because people are like, where do I go?
Yeah. Although if you have some people that invest in physical gold and have, oh, I've got these gold bars, it's like, because if the currency, and I'm like, so to buy a carton of milk, are you going to go down and shave off?
No.
Are you going to shave off part of that gold bar to pay for
Right.
something? That's not
The
going to work.
potato
either.
peel is not going to work. You're going to have to
No.
get a little smelting operation going here and melt this.
Smelting. I just wanted to hear you say smelting on the show once, Dan. That's
My
beautiful.
dad likes to eat smelts. Isn't that the same? Spelled the same? I don't know.
No.
So we'll skip to number 5. Product pushers, Tony. Let's go here. What do you think I mean by product pushers?
I don't know. Oh, product pushers. I think you mean people who, like financial advisors, that want to sell insurance and convince you to probably, instead of the market, because it's so volatile, they love market volatility because then it allows them to sell annuities, which have principal protection. Yes.
Absolutely. So annuities are a great example. Whole life insurance with cash value life insurance.
Yeah.
They love to see the market correct.
Yes.
They love it. Not mainly because of what's in it for them, and it makes their product look more attractive.
Yeah.
Especially, and this only now you could say I'm a hypocrite because I have an insurance license, right? I have annuities in my toolbox.
Oh, sure.
But if my only option was whole life insurance, then every solution would involve whole life insurance, right? Because then I can't provide any value.
Right. And that's your sole goal, is to sell insurance related products because you're an insurance salesman, but you're a financial advisor who does it across the board, and you're not focused for the main part of your income just on insurance like a lot of so-called financial planners are, correct?
Right. And I think there was just some legislation that passed that's going to prohibit insurance only people from using the term financial advisor because it confuses people.
Oh, yeah, it's terrible because number one, they're not held to the same compliance standards. They're not audited. If they're don't have the licensure and they don't provide all the products and investments and don't recommend everything, if they're just trying to sell annuities and cash value life insurance, then they shouldn't be called financial advisors or planners.
Right. And I would argue that they're not looking to see the market crash per se, because they probably have money in the market themselves.
Right.
But it helps sales. I'll tell you that. William Devane selling gold on TV. If the market crashes, more people are going to be buying gold, and he's going to get more money in his pocket.
I mean, gold hit an all-time high because the market volatility.
Right. So the people that are selling gold are loving it. Costco, was it Costco that was selling gold bars?
Yep. There's a few places now that are selling gold bars. My wife went over to Dubai for work. They flew her over there, and they have a gold bar vending machine in the Burj Khalifa hotel in the lobby.
And the person that owns that machine and the creators of that gold and the sellers and the distribution partners of that gold company absolutely love the stock market crashing because it just drives up demand.
Yep, exactly.
So when you're dealing with people that are suggesting products or as a solution to a financial issue, just understand, are they looking at all the other factors, right? But again, it's important to know that there are people out there. Now, the last one, 6, this is where I think the retirees that are watching the show should be. It's called Opportunists and Bargain Hunters.
Yep. I would say that's why I mentioned Warren Buffett. He falls into that category.
Yeah. When everyone's panicking, that's when you should be a buyer.
And that's what he says. When people are fearful, what's the quote? I'm greedy.
Mm-hmm.
And when people are greedy, I'm fearful. That's what he says. That's his outlook to market investing.
And he came in and got a huge deal when the 2008 crisis came and bought some, JP, whatever it was, the bank shares. And he was an opportunist, and you should be too. So if you're watching this still, thank you. You're a retiree. You're saying, all right, well, I don't like all these doomsday people. I don't like anti-capitalists. Good. Short sellers sound anti-American to me. alternative investors, I get it, but I have a friend that's a gold bug, and yeah, they're so annoying, especially when the markets crashes. Product pushers, no one likes. No one likes product pushers, especially when they find out that that's what you've been doing this whole time. You didn't realize you were being sold a product. But bargain hunters, people can get behind, and opportunist people can get behind, but it's the hardest thing to be. It's easy to be a doomsday sayer because you're going to be right at some point.
Sure.
And people just ignore, and then they just tout that they were right. It's easy to be an alternative investor or sell product, but it's really tough to be an opportunist because it's the hardest part of the game, trying to time the market. So what I'm saying here is you should be thinking along these lines, but not what a lot of people do, retirees, is they have money on the sidelines. We did the bucket strategy. You have your income set aside so it's not in the market, but they also have some other money that they have in low risk investments, bonds maybe, or CDs. And when the market tanks, they usually say, thank goodness I have this CD. And what I'm saying is there should be a slight shift, if possible, to say, yeah, thank goodness I bought this CD. If it's not being used for income purposes, but long term, maybe I take this opportunity when the market's down to move from the CD into the market. Maybe I move from that fixed annuity that I have into the market now because it's gone down. That's the bargain hunting that people like to hear about, but they don't do it because they're scared. And it's the most difficult one to be, but I think it's the best way to be.
Yeah.
So come up with hard numbers, try and take the emotions out of it. If the S&P is down 25%, then I'm going to start adding to my stock position. It's tough to stomach when the market's going down to be buying. Catching a falling knife is the term. You don't want to be doing that. But what I'm saying, in the long run, opportunists are the winners. But for retirees, they may not have a long run. So maybe they don't even need to play this game, and they can hate all the six that are hoping for the market to crash.
Sure.
There is another, Tony, and those are people that don't get involved in the market at all. So again, they don't necessarily want to see the market, but when the market goes down, they kind of get a feeling of gratitude, like, yeah, I'm glad I have all my money under the pillow. And there'll even be those ones that kind of laugh at the people that have all their money in the market, and they
my mom just I always heard her harp on, that's gambling, son. We don't gamble. We're good. My mom was good Baptist. Baptists don't believe in gambling, and the stock market is gambling. So we're not in the stock market.
Right. So is she hoping for the stock market to crash?
No. My mom wasn't hoping for that because she knows that has an effect on everybody, even those not in the market, because our economy is so tied to it. Because she was an accountant, she's a CPA, so she knows money. But she was very anti-market, and it was just weird. But that's part of that generation too. I mean, eventually, when 401ks became more popular and stuff, her and my dad had 401ks, and that was in the market. And I said, "What about that?" Well, that's managed by my company. That's not me in the market. It's
right. I gave it to my bookie to make the bet.
Yeah. It's my bookies has the gambling problem, not me.
Right. So your mom is not maybe Schadenfreude where she's hoping for the market to crash.
No, she's not one of those.
She's more. Yeah. She might be the ones I'm not getting involved in it. And if it goes down and people complaining, well, they deserve their comeuppance anyway.
Yeah.
So hoping for a market correction isn't a good look. You don't see it, and so you don't hear much about the short sellers. You know they exist, and that's on their investment profile. And this is, hey, I'm a short seller, I'm a contrarian, but they're not out there saying right now, hey, we have the best. They're not laughing at the market going down. No, some of them will, but for the most part, people don't see that because they're not shopping for hedge funds. You have to have some wealth to be involved in that.
Right.
So the general public doesn't really hear about the success that is happening for people that are contrarian. They only hear about the drama of the people that are losing, which is most people. So it's really not a good look to be again, hoping for a U.S. stock market correction. But when it does happen, instead of panicking and moaning about it, it could be an opportunity for you to cheer for it, in that you now have a strategy to buy low.
Yeah,
Again,
that's the
this is
bottom line.
right. It's not investment advice.
You
I'm
want
not
to
telling
buy,
you to
but
do
you
that.
want to. I think you can give the advice: buy low and sell high. I mean,
Oh yeah, it's
90
not easy.
over 90%. Well, it isn't so easy. If it was easy, and 90%, what's the stat? It's over 90% of individual investors anyway. Buy high and sell low.
Yeah, they because emotions get in the way.
Yeah.
And I did a little clip on it. You can watch it on the secret to creating a small fortune is to start with a large fortune and then try and time the market. Work your way down from the large fortune to the small fortune. That's the secret.
Right.
So yeah. So I think if you see someone celebrating the market correction, you'll figure out real quick which one of the six they're in.
Sure.
If they're anti-capitalist run, if they're fearmongers, they're always going to be those
The
people there.
media.
If they're selling short, or they're making money on the way down, maybe you talk to them and say, what did you do? What did
Yeah.
you do? But if they're truly celebrating a market correction because they're trying to get in at a lower price, and that could be a generational thing. There could be the younger kids saying, wow, I'm in my 20s, now's an opportunity for me to get in. But remember, we might be down 20% from the top, but we're still up in the past year. So it's it's not like a huge opportunity.
It was almost 26%, 25% last year that the market was up. So
right. So what did you do? You missed a year.
Yeah.
Anyway, don't vilify everyone that's cheering, but give them the side eye, Tony, and give them, or the Midwestern, Minnesota nice. Okay, that's very nice of you, but
or the
bless
Southern,
your heart.
bless your heart. Yeah,
Bless your heart.
Oh, bless your little heart.
Uh-huh.
Yeah.
All right, Tony. Thanks for a good show.
Yep.
We'll catch, and don't cheer for the downward market. Let's cheer for the upward market.
All right.
We'll catch everyone next week.
Sure.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Riddle nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.